Welcome. I'm Catherine Magana here with Steve Wolf, Rachel Ivanovich, and Vince Stefano, where we're here to provide you insights about the markets, planning, and much more. But before we dig in, we want to welcome back Steve Wolf. He had been a little under the weather the last few weeks, so we're glad to have you back. And
if I cough through this, I'm going to apologize. Don't mind you. But they said the cough would last about 2 or 3 weeks.
Oh, well, I'm glad you're feeling better. Okay, to just give you...
I was feeling better.
Oh,
No.
Well, you look better than you did last week. Let's just say that.
He feels better than he looks.
Okay, hey, come in the office. Boy, you look really bad.
I feel bad. I'm like a little honest about it, but okay. So today is June 5th. As of yesterday's close, June 4th, giving you a quick update on where we're at with the markets. The Dow Jones year-to-date is down 0.27 as of yesterday's close. The NASDAQ, which is more tech stocks, is actually up year-to-date 0.78%. The S&P 500 is up year-to-date 1.52% as of yesterday's close. And the Russell 2000 is down 5.90 year-to-date. And all the indexes were actually up this last week. So we did see some, from last week to this week, we did see some positive returns overall. But it's just kind of interesting. It seems like, the markets or the sentiment kind of shifted. It seems like there's still some earnings coming out. I believe today at the end of the day, we have a big AI company reporting some earnings. And looking at just kind of a quick update on interest rates, it looks like mortgage rates, the 30-year mortgage rate came through. Right now it's at about 6.85%, and the 15-year mortgage rate as of this morning was 5.99. So it's down a little bit from over this last week, but that's where we're at with some of the mortgage rates. Looking at the one-year CD and Treasury rates, they really haven't changed from last week. So the one-year CD is at about 4.3%, and the one-year Treasury is about 4.135. So not a lot of change from last week to this week. And then I do like to report kind of where we're at with the Fed rate. I know it changes all the time, but there's a 1% chance of a Fed rate cut in June. So that's come down pretty significantly. And then it looks like in July, we're looking at a 30% chance, and then 75% in September. So that was kind of a little bit higher than usual, but we'll see. I'm also hearing potentially there will be no rate cuts this year, but we will see what happens.
So once again, nobody knows.
Exactly. It changes like almost every week.
The stock market basically has done a round trip this year, where it started and then it went way down in the beginning of April, somewhere, 15, 18% down, and now we're close to back to even again. So for the year, we're kind of flat, and I think that people are nervous, they're cautious, but earnings really have been pretty good, and the economy is good, which is another reason why the Fed may not rate or may not lower rates, because if they think that the economy is really doing well, and employment is doing well, and then inflation is kind of hanging in there, they may not lower rates at all.
Well, to kind of expand on that a bit, if a Martian came down and landed on Earth today, and he looked around, he would see war raging in Ukraine and Russia, tensions smoldering in the Middle East, China saber rattling in the Far East, tariff uncertainty in the U.S., Congress battling over our tax and reconciliation bill, terrorist activity aimed at religious groups here in the United States, and the big question is what's going to happen with the Fed and rates. So with all of this being reported nonstop by the mainstream media, the Martian would probably think the market's down 10,000 points. But like Catherine just said, the market has been kind of chopping around, and it's actually flat for the year. And we've been saying this all along. The market focuses on revenues and earnings, and Q1 earnings looked really good. A large number of companies, predominantly in the technology space, had earnings and revenue above consensus, increased forward guidance, announced multi-billion-dollar stock repurchase programs. And this is really interesting, and I like this because, the companies believe their shares are currently undervalued. and they're very positive with a forward-looking, guidance by their company. So that's good. They're announcing new innovative products and services, and now there's some M&A activity finally coming around. So all of this, as Steve was saying, hey, it's good. It's good for the economy. And I think the Martian would agree. Things aren't that bad. And I think he also would agree with me when I say, don't sit this out. Get back in and make sure you're investing in the market. And if interest rates come down, as they are, if the Fed cuts interest rates, CDs, fixed income, not going to be great returns. And so people are going to be forced back into risk assets. So, the Martian is looking at the big casino and saying, guys, get in the game or, forever miss out. So,
how many Martians have you talked to lately?
A lot of Dell Martians. I see a lot of Dell Martians.
Well, I see. Look, the bond market is still saying that there's something amiss here. And I'm sure it has everything to do with what's going on with the tariff situation.
Of course.
So, are the tariffs going to be high? Are they going to be low? Oh, I mean, just what was it, yesterday or today? Trump had a phone call with Xi from
that was
China.
today. Yeah, today. The market just rallied like crazy.
Well, it rallied a little bit.
Well, it got to its very highest point, and all of a sudden the algos kicked in and they knocked the market down a little bit. But that's always the case when you start hitting those resistance levels. So but I think that's very positive that they're talking again.
Right. And you got to think too, though, that a lot of economic activity has happened because there are a lot of companies that are importing as much as they can before they think that their tariffs are going to come in. So now what's going to happen once the tariffs really hit, that you've got a ton of materials and goods and whatever that are stockpiled now. So what happens over the next 2 or 3 months? Who knows?
I was reading this morning that the U.S. May vehicle sales dropped this month to 15.65 million from previously at 17.27 million cars. And that earlier in the year, a lot of people that were buying cars actually tried to buy them before the tariffs. So it looks like people are changing their spending patterns a little bit, maybe not making those big purchases.
Well, the other thing, too, is that means the used car market has gone way up. I mean, because of tariffs increasing the price of a new car, they're actually pricing some people out of buying new cars. So they're looking at good used cars right now, which prices are still pretty high. So if you got a good used car, you want to sell it.
Yeah, maybe I should sell my car. Get a bicycle.
I said a good used car.
Get a bicycle.
So where are we at with the tax reform, the big beautiful bill? It seems like that's still
we're still waiting. I think we're going to wait until Independence Day for that one, or maybe later in the summer. But because we don't know what to do, we go with what we've got. So we look at the current tax law, and it's time for a mid-year review is kind of the way I look at it. I'm meeting with a lot of clients, talking with them about their June 15th estimates. Let's look at and see, has your income changed so far this year? What is it going to look like? And we've got to go with what law is out there right now.
Well, we need some definitive answers here pretty soon because
absolutely, believe me, I would love to have some definitive answers about the tax code.
Right, because not only are individuals not sure what to do, but businesses aren't sure what to do, and you can't run a business without having some certainty of if I do X, that Y is going to happen. So they need to figure out what the tariff situation is going to be. The other thing too, if they don't get anything done, those taxes are going to go way up again because it reverts back to where it was.
That's right.
However many years ago that was.
2017 is when at the end of 2017 is when it changed. So yes, the Tax Cuts and Jobs Act will be sunsetting at the end of 2025 unless they do something.
Right, and I think a huge raise in taxes will absolutely slow down the economy a lot.
Yeah.
So there's so much uncertainty right now. So I agree with Vince that you probably should be in the market, but you still have to be a little bit cautious. Perhaps if you're a little bit older and you're a little bit more nervous, take a little, you've taken some out of the market. That's probably not a bad idea. You can get halfway decent returns on a money market or short-term treasury bills or something like that while you wait. It's not like you're going to make nothing. So I think I would still be cautious until we know a little bit more.
I think one thing that is certain, well, nothing's certain with taxes, but that they aren't proposing changing are the safe harbors. And I think it's a good time to do a withholding review and really look at how much will I have withheld from my IRA distributions? How much will I have withheld from any pensions? What are my estimated payments? What do those look like? And making sure that if you look at last year being 2024's tax liability, am I on track to at least minimize penalties? Because I've heard nothing that they're going to change the safe harbors. So I think it is a good time to do withholding reviews and just make sure that you're making your estimated payments by the June 15th deadline.
Going back a little bit to, if you're looking for some income, we've been talking to some people who have been telling us about some private investments that are a little bit different than a bond or even a dividend-oriented stock that, you can get 6, 7, 8% on. There is a lack of total liquidity on these things, so you can only get out at certain times. But there are other things to look at that might not have a correlation between stocks and bonds that for someone looking for income, you might take a look at it. And we'd be glad to let people know, give us a holler. We'll tell you what those things are.
So kind of tying into the mid-year review and checklist, this is a good time. We're, it's June, here we are, half the year's over. Do we need to revisit your allocation? Are there some different investment options, or where are we at?
Have you had any life changes?
Yes, and that's a big thing because a lot of things happen. Is there a marriage?
Marriage this time of year. Or babies? Have you had a child, or maybe your child had a child?
I hear more about divorces than marriages.
Yeah. And then recently, very recently, we've had a few clients pass away, and just making sure beneficiaries and everything, they had everything in place, but they had some changes they made over the last few months, and just making sure, where, what are who are your beneficiaries? Is that still what you want in place?
Update your estate docs.
Yeah, and that, looking at your trust and your wills, even though we don't do that part of it, you work with your estate planning attorney, but I do think it's a good time to kind of revisit.
It's important not to ignore the planning until the fourth quarter, because a lot of people will wait until the very end of the year, but I think it's a good time to check in, and especially if there have been any changes.
Of course, it does make it a little bit harder, doesn't it, that you're not quite sure of what all the things are going to be?
That's true, but there are still some things to look at and plan for.
And also, where are you at spending-wise? Has your expenses changed? For me personally, I wasn't expecting a vet bill as outrageous as it's been. We've had some things happen with our little furry babies. That wasn't part of the budget.
You got to stop beating your dog up. That's the problem.
Right. You can't hit him over the head.
And then if there was some extra travel or vacations that maybe that you didn't plan for, or you're planning for. So just, it's always good to kind of mid-year revisit.
Yeah. Are you on track with the 401k contributions or IRA?
Because there's also increases each year with those too.
Exactly.
And there's always going to be uncertainty in the market, as Steve said, but you have to remember the market, climbs a wall of worry. Mm-hmm. And it's oftentimes that when the market is anticipating something 3 to 6 months, that's when you get the biggest move to the upside, because it's always sell on rumor, or it's buy on rumor, sell on news. And I think we saw that in, was it mid-April or beginning of April, when the market had a very stiff rally to the upside. It was all tariff, and all of a sudden, the market's rallying, and all those people who wanted to get out, all those people who said, I can't take it, all those people who wanted to go to, cash funds, missed an 18+% rally in the market. And, they're sitting there now wondering, do I get in now? Do I not get in? So, the uncertainty in the market is always going to be there. And as, I think, Steve, you mentioned something about looking at your situation. And if you're older, maybe you shouldn't be so fully invested. Maybe 80% instead of 100%. I don't know.
That would be conservative.
Yeah.
Too.
No, I don't know. For me, that's conservative. No, I'm just thinking that, for me, dividend stocks are very conservative.
Well, once again, each person has their own risk tolerance and age and time frame and goals and kind of what they're looking to accomplish. But we do have some clients that have some new money that's coming in from rollovers or things that are happening, and there is still some worry out there from some investors. And so what we're doing is we're just dollar cost averaging in. We're putting part to work, and then we're going to buy in. So we're not, if the markets move, because we're not out of the woodworks yet. And when the 90 days is up with the tariffs, we need to know, is that going to get kicked down again? Another 90 days?
Washington, they've been kicking the can down the road for the last 25 years.
So
Well, one of the things, I was listening to Senator Rand Paul, and one of the reasons he doesn't want to vote for this bill is because the ceiling, the debt ceiling that they have supposedly, they want to raise big time. And his thought process is, hey, how do you cut spending if you're allowing yourself to increase it by a lot? Yeah. And I don't think he's wrong. And I talk about this all the time, that one of the real issues we have right now, Moody's just dropped the U.S. rating to below AAA. They're the last of the rating agencies to do that. But we're finally starting to take a look at, this is a problem. Spending is a problem. So now we're looking at this bill that the Republicans have brought forth out of the House. Some people are saying it's going to add a lot of debt to our already high debt, out there. Others are saying no, it's going to grow. We're going to have huge growth, which will in turn have higher revenues for the government. I'm a little bit more in the camp of the second, that if you allow businesses to grow, you're going to have a wider tax base, and it will grow. That's what actually happened the last time Trump was in office, with somewhat similar policies, but without tariffs. And that, to me, is still the wild card. A tariff is a tax. If you tax things, usually that causes it to slow down. Okay, so not sure how this is all going to end up, but the debt is a monumental problem, and it's only growing larger and larger. And I hear people say, well, do you know how much Trump added to the debt? And I hear, do you know how much Biden added to the debt? Do you know how much Obama? They all add to the debt. Okay, so I don't care who's the president. It's the Senate and the House that really has the bills that are going on, and they need to make sure, my opinion, they need to make sure whatever they're doing, the debt is going to be cut down. Maybe slowly, it's not going to happen all at one time, but maybe over the next 20 or 30 years, we have zero long-term debt. And so, that's, again, there's a lot of consternation because of that, and there should be, my opinion. Now, that doesn't necessarily mean that we're not going to have more technology. We will, and those companies will do well. So if you're looking, this is a stock picker's market, my opinion. Okay, I don't think that this is a time that you just say, I'm going to buy the S&P 500. Because there are going to be some stocks that are going to do great. I mean, look what just happened with drones. Okay, Ukraine.
Yeah.
What was it, a few days ago?
Oh, yeah.
They took 25% of the Russians' missile technology,
airplane,
whatever it was, with drones. And that really is going to be the way we fight wars, I think, in the future. So drone technology is in there. Whoever is doing those drones, I think probably would make a good investment. I don't know. You got to look at the individual companies. But drones are definitely a place where things are going to grow, especially in defense. So I think it's a stock picker's market. I think if you're good at that, or you have people who are good at that, I think that now's a great time. And I think if you're just looking at an index, I'd still be a little bit careful.
And I have a question for you.
Uh-oh.
Where is your fear and greed index?
I thought you would ask that. So,
do you have it?
Yes.
I do.
All right. Let's hear it.
Today it's at 62, which is firmly in the greed area, which goes from 55 to 75. But it's down from where it was 2 weeks ago.
Yeah.
2 weeks ago, it was at 72. So we're still in the greed area, but it's moving down a little bit.
It's interesting because I think last week was about 65, and then it's down a little bit, but the markets are up. So it's just more from last week.
The markets are up a little bit. They really were up a lot in May.
Yeah.
After
I was like,
the
we're in
debacle,
June already. Wait a minute. You're
That's right.
Wow.
This is June.
This is June.
Yeah, but a lot of stuff going on. There's a lot of cross currents going on right now.
And that's why, just the stuff that I said originally, in the opening. I mean, that's it, the market. When you look at that, it should be down huge, but it's not. And I think that's just tells you how resilient our market is.
And I also think part of that is because the technology stocks have come back a lot.
Come back huge. And that's what we've been saying all along.
Right. Well, you've been saying it for sure, so kudos to you for that.
Thank you. I appreciate that. Coming from you, That's
a compliment.
That's a compliment
Yes. I gave my one compliment
for the year.
There you
yeah.
go. Well, as we wrap up, I just want to say happy early birthday to Rachel. She has a
Oh.
birthday tomorrow. So
Hey, happy birthday to you.
Oh, thank you.
Vince had a birthday.
Vince
I
had a
earlier
guess
this
we
week,
won't
so-
see you tomorrow, huh?
Nope.
I didn't
I was
think
saying
so.
Vince had a birthday earlier this week as well. So
I hope we keep having birthdays. That's
yes,
always a good
that's
thing.
always a good
Yes.
thing.
I always think it's a good day when I'm not looking up at the dirt. So,
Exactly. Nice.
anyway, all right. Anything else? All right. Well, if that's it, we'll see you guys next week. Thanks for listening.
Great.
Thanks.
Thank
Bye.
you.
Please stay tuned for important disclosures. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional. WWM Financial is a registered investment advisor with the SEC.